Hello everyone, all the committee and the participant of ICEBTS 2022. In this really good occasion, I will present to you the academic paper conference entitled Impact of COVID-19 on Indonesia's Stock Portfolio Allocation based on technical and fundamental approach using machine learning algorithm. And this is my biography. I am Atha Riyadhi, currently pursuing master degree of technology management at School of Interdisciplinary Management and Technology, 10 November Institute of Technology, Indonesia, with business analytics specializations. And this is the abstract of the research article. Then the description outline of the presentation will come with introduction, research, methodology, and then following the result and conclusions. So the presence of COVID-19 pandemic in Indonesia has brought significant changes with various challenges that were never imagined before. In Indonesia alone, COVID-19 has infected more than 1.3 million people since the first case. More than 100,000 of people have died due to this pandemic. COVID-19 not only poses a threat to human health, but has an impact on economic growth throughout the world, including Indonesia. An official recession hit Indonesia in Q3 2020, the economic growth minus 3.49% after experiencing the same thing in Q2 2020. And this is caused a demand and supply shock, impacted many companies that laid off the workers and disrupted their businesses while people's purchasing power decreased. Almost all economic sectors have been negatively affected by COVID-19 pandemic, especially tourism, manufacturing, economy, transportation, social, and food beverage. Then the spread of COVID-19 also damaged investor sentiment, caused reducing share prices in major of Indonesia capital markets. The left pictures shows that the Indonesia Stock Exchange tends to stabilize before 2020. Then in January 2020, there was a decline in the value of the Indonesia Stock Exchange. The largest decline value occurred in February and March 2020, where the COVID-19 began to take positive victims in Indonesia, and the number increased from time to time. So, in minimizing risk and getting maximum profit from a stock in the midst of the recession due to the COVID-19 pandemic, investors really need an understanding and knowledge to be able to make an optimal portfolio. Optimal portfolio is a portfolio composed of a combination of individual stocks with optimal returns and minimal risk. Stock diversification using portfolio analysis is the right decision to minimize large losses due to black swan event. So this is the following are 35 stock issuer data used in the research analysis on the Indonesia Stock Exchange LQ45 index. The issuers taken in the study are issuers that are consistently included in the LQ45 index during the research period. Data taken is fundamental data from companies' financial statements like return on asset and asset turnover. Also, the second is the daily stock prices, which is a reflection of the closing price during the research period in the Indonesia stock markets. Then the variables used in the research divided into time periods of 2019 and 2020, respectively, taken from assets turnover and ROA, which represent the fundamental indicators of stocks, and the Sharpe ratio, which represent the technical indicators of stock in the capital markets. And then the first step of the research methodologies come with the crawling process, which use an application programming interface API request using data reader from Python programming language to retrieve fundamental data and technical indicators from the Indonesia Stock Exchange and Yahoo Finance website. Then the clustering analysis is done using K-means algorithm. K-means method is one of the unsupervised machine learning algorithm for solving many clustering problems. The procedures in this algorithm follows a simple and easy way to classify a given dataset through a certain number of clusters, a priori fixed. And then after clustering analysis, the last process, we build the portfolio. The best shares will be determined as representative of the clusters to be formed into a stock portfolio. The Sharpe ratio variable will be used in determining the best shares of each cluster. The portfolio that has been formed at this stage will then be tested. The test is done by actual data on the closing price of each stock from January 2021 until December 31, 2021 that will be used in the portfolio performance testing phase. And then the return of each portfolio will be used as the main indicator in testing phase, and additions, the risk, and each derivatives, diversified risk, and diversified risk from each portfolio will also be analyzed. So the result of the research is start from the elbow method analysis and silhouette plot analysis, and it is found that 4 clusters are the best number of clusters as seen from the overall shape of the elbow and silhouette plot, which passes the average silhouette score. Then the 4 clusters, starting with cluster 1, is a cluster were dominated from assets intensive industry business, where these companies do business by maximizing assets of great value to generate revenue or profits, such as large mining and construction equipment companies. It can be seen from the figure that the issuer of cluster 1 are companies that generate large revenue from their assets, but the profits are below 10% due to operational costs ranging from large asset maintenance to high operating expenses and liabilities and so on. And the figures also shows that this cluster is the one who gets the highest profit return during the pandemic and even recession in 2020. This illustrates that these cluster members have very positive sentiment supported by the government's policy to keep running their business at the recession period. And then the cluster 2 is the cluster with the most members among all existing clusters, who dominated by banking stocks, where the stocks are companies that gain the capital from how much money is saved in the company. There are also some property and construction issuer who experience high decline in sales due to decreasing level of people's purchasing power. And then the figures show that cluster 2 consists of stock issuers who have a low ability to convert assets values into revenue and profits. When compared to other clusters, the value of revenue ratio before even during the pandemic was only in the range of number below 50%. Then the cluster 3 consists of 8 issuers who are members of the cluster who run their business directly with end customer, or commonly referred as B2C. With the decline in purchasing power that occurred during the pandemic resulted in a decrease in both sales volume and profits to these companies. Figure shows that the cluster 3 are companies with good business fundamentals with a decrease in the ratio of profit and revenue to assets not as big as the other clusters during the pandemic periods. It happens because the majority of the members of this cluster are stock from the consumer cyclicals industry, where the industry run the business selling primary goods for the community. And also online shopping apps, which is increasingly being used during the pandemic, also have a efficiency effect on transportation, operational costs for this industry. And then the last one is cluster 4, the last cluster that only consists of 2 members who are big enough to do business directly with end customers with daily cycle consumption product. In view of this, although there has been a massive decline in people's purchasing power, especially in secondary and tertiary goods during the pandemic period, the product of the 2 members of these clusters are needed by the community for daily use. And the figure shows that the stock in the cluster 4 can effectively convert revenue into large profit compared to other clusters when viewed from the business fundamentals. The strong business fundamentals mean the company has an efficient strategy in reducing the costs needed to generate the sales value. And then we come up with the portfolio formation. After completing the analysis clusters, stock that have the highest Sharpe ratio in their cluster will be selected to form a portfolio. The two best stocks from each cluster can be seen in the picture. Based on the result of the Sharpe ratio rating, the best stocks selected were INTM as a representative from cluster 1, BBCA as a representative of cluster 2, and ERAA as a representative from cluster 3. And then we testing the portfolio. The actual data on the price of the three stocks from January 2021 to December 2021 will be used to test how effective the cluster method in forming the portfolio. And then we has a selected portfolio has a return of 21.8% against each initial price and 1.4 for the LQ45 index yearly return. Figures also show the portfolio has general risk of 0.0798. As for the diversifiable risk indicator, the selected portfolio has diversifiable risk value of 0.0139. Then the selected portfolio has an undiversifiable risk of 0.0658. And based on the result of the analysis, the selected portfolio includes a small risk for investors to invest their funds in the portfolio. To see further how selected portfolio performs, an analysis of the return of each stock will be carried out. And in addition, correlation of all stocks of each portfolio is carried out to see how strong the relationship between price changes is between one stock and another. Figure shows the selected portfolio has proven to be well diversified using clustering method. All stocks in the two portfolio have a correlation value which is included in the category of relatively low correlation. And based on the result of analysis and interpretation of resource, several conclusions can be drawn as follows. The first is it was found the LQ45 index during the period before and after the pandemic could be divided into 4 clusters, each of which had different characteristics. The investor can use this result to make better investment decisions, such as selecting clusters whose price movement are consistent with the investor target return and risk profile. Based on the result of testing the performance of portfolio that has been formed, the performance of portfolio is proven to be much better than LQ45 index market at the macro level. And then the third, and the study proves that systematic risks that have occurred due to the COVID-19 pandemic have become awareness for investors to be really strong in studying the situation and must be able to make investment decisions with the right strategy to avoid black swan events. And then the last one, the industries that still look competitive during the pandemic period were industry from the basic material, finance, healthcare, consumer cyclicals, and consumer non-cyclical sectors. Industry outside these sectors experienced significant correction compared to the performance of the previous year. Learning from this experience, of course, the government policies are needed and will have a direct impact on the market at large. And then this is the appendix of the research data and Python program code. And thank you very much and see you.